Hi guys, I'm recording this video on May 28, 1:40. So let's jump right into the quantum review. So we have right here IONQ. This is a 4-hour chart. So I wanted to show you guys right here. So we have this consolidation of IONQ, and IONQ continue sustaining the price above the 78%, so it's above $46.80. So it looked like IONQ is going to continue running to the moon. So how you guys can see right here, when we go down to 15 minutes, you can see how it create this strong consolidation, and the price in this case stay all the time above that 78% Fibonacci retracement. So the chart is showing the stock is going to continue riding up. Always you have to protect yourself. If you make some money already, your stop loss should be or here or here. If we go into the hourly chart, you can see your stop loss should be anywhere under 44 or 57 cents, around this area right here. We always can see what the market trying to do, or the market can switch. In any case, it go in the opposite way. That's why you always have to have your stop loss protecting you profit. Okay, this is a good run what we have here with IONQ already. You can see guys, right after the ABC, it take off, and look at how beautiful that chart is looking right now. So this is the daily bar, and it went all the way down here and found support, and you can see that support was here. Let's get the horizontal line. You see this high right here when it create the ABC. Primarily the prayer create before break down this low. That is now a support, that high right there. You see the price was down there and shoot back up. So it looks like it's going to continue running to the upside, and we're going to have a very good move with this part. Okay, so the next one is going to be QBTS. So in QBTS, I throw this Fibonacci this morning, and I see it's trying to consolidate above the 78%. So if we go down in 4 hours, we can see already changing that direction to continue to the upside. Same thing as IONQ. If you are in this run from this here down here from the ABC formation, so if you are from here, this area right here, your stop loss should be down here, protecting this run that you already have and you favor. If the stock kick you out, you're just going to wait until it create another ABC, another market structure, and here is why going to put you away from the different traders. It's going to put you in that 5% and that 1%. They always make money with the stock. A lot of people blame the stock. A lot of people blame the stock market. It's up and down. It doesn't matter. That it doesn't matter. It's a type of strategy that you use. So if the market hit you out and kick you out, you're just going to wait until the next formation. You go down to the hourly chart, and you can see how it rebound from that bottom. You can see in this bar right here, like it looked like an inverting hammer, and that was the end of this small pullback. Now, let's say that tomorrow the market decides later on the day to come down and break this bottom and kick you out of your stop loss, hit your stop loss. So you're going to wait until you have some kind of market structure around the 61% or the 50%, depend what happened with the stock at that moment. But as of right now, it looked like it finished already that pullback, and it's going to continue going up. Remember again, a stop loss and a run like that, you move your stop loss here. First was here, then here, here. Now you got it right here, and that's 78%, which is 16 with 80. You can have it 16, 1650, and let the market be. Okay, so the next company is QSI. This is a new one that we bring the other day. Let's go to the daily chart. So we have the ABC right here, the market break, consolidation above the 200-day exponential moving average, and went up and break also the 100-day. Right now we have this pullback, we're just going to see what's going to happen. The stop loss right under the 200-day exponential moving average. A lot of people say, I don't use a stop loss. Good for you. I use my stop loss. I don't give you my, whatever money that I make, I don't give it away. So that's why I move my stop loss very aggressive, depending on how, always giving some room to the price can range back and forth, but I always move my stop loss and adjust my stop loss. Next company, QUBT. So in the daily chart, QUBT is doing almost the same. You see this consolidation area right here. Let's go for an hour. You can see it's the same thing. You got this high right here. The price is around there, and the market is going to decide later on if it go down or continue. For right now, the stop loss should be down here, or later on in the day, at the end of the day, you can bring it up here. It's going to be very tight, so almost no range right there. Let's see in the hourly chart. Yeah, the stop loss definitely should be down here. Okay, so not so close to give it some range to the price can move up and down. Let me see, the price is okay. So this is something that, and I'm glad that I went to 4 hours to like that. I can see this. This is something that we have to keep in mind. This is a 50%, which is right now the resistance that this market was rejected from. So 50%, the price is 13.90. It went to 14, and now it's getting rejection from that price. So you should pay attention to that. The stop loss very tight right here. This is very important. It's a 50% of the whole run. This is very, very important resistance at this moment. It should accumulate right here, creating a consolidation and down break. If it doesn't break right there from that level, it's going to be a retouch the 38%. So that's why your stop loss should be here, because you don't know if it breaks that price to where the market can go. If you want to be less aggressive with the stop loss, you can keep it under this 2 bar right here, which is under the 38%, around $10.72. So under that price. So you can keep it around the price and wait for the market to see after the next breakout, you bring your stop loss here or in the next low that will be around here, okay? So next one is RGTI. RGTI doing very good, how you can see right there. Same thing, doing a nice retracement, and right now it's heading back up. We see in the 4-hour chart, you can see right here, the consolidation, and this is above the 78%. No, I'm sorry, 61% is above 1345. That is the 61% of this run, and the market is above that number. So it can create another consolidation like this one in this area right here and continue going up. So the next company we have, we have everything. Okay, this is a new company that I want to bring to you guys. And this company bring my attention a couple of days ago. You have an ABC right here. How you can see, let me go to the daily. We can see better in the daily. So how we have, this is more ABC right here. Still ABC, it break, confirming this structure. This structure is confirmed as an ABC. It's above the 200-day exponential moving average, and the company is starting to showing some strength. In my opinion, we need to wait and see another strong bar, or if you want to be an aggressive buyer, you can buy it right now, which is above the 100-day exponential moving average, and put your stop loss down here and take that chance. Okay, but it's another company with a great formation above the 200-day exponential moving average, so the strategy is there because it came from the high of the market. So let's throw some Fibonacci on it, and we can see the support and resistance that we have in the area. You see right here, I look on the past, that low right there. If I'm going to do it the opposite way, I bring it from here to here. So right now we are very earlier, we are above the 23%, but the 200-day exponential average is moving average is down here. So we look very good. Also, the histogram is in the north side of the histogram, looking to start to get some strength. So let's see if I would like, me personally, going to wait for another bar to see some more interest in this company. if you can see right here, the company wasn't with some kind of this closing error and have a lawsuit class action on the company. Let's see the company right now. The technical analysis is showing more buyers and a strong buyers and moving average, more buyer and interest, and the oscillator is neutral. But you can see right here, it's a lot of buyers in just a few sellers. The forecast of the company, they say the max, we're talking about $44.40. No, I'm sorry. They're talking about the $6 for the price of the company. Right now, the company is $4.83. It can break that price. I don't mean that is the cap right there. It can break that price easily, depending what's going to be any result. But the most important thing, economic result. The most important thing is the formation they're starting to create right here. Market structure. That's the strategy that I'm trying to teach. ABC, double bottom, market structure. That's what we're looking for to know where the company or the price of the market is and when it's going to be the next swing. So that's why right here is an structure. A, B, C, break, confirming this structure, consolidation above the 200-day exponential moving average, and break the 100-day. So this is definitely a company that we should pay attention to. And we got one more company, which is RCTA. This company is not ready yet, but I want to bring this company to you guys' attention. You can see right here the structure formation. It don't break yet, B. So you got A, B, and C, and the price is consolidating above the 300-day exponential moving average. And remember, on the 300-day exponential moving average, we heading to the downside. Above, we are completely in the long run. It looked like we have some kind of formation, so this is another company that we should have in mind. Okay, so this is everything that I have for today, and nothing. Like always, hoping that you guys learn something from my videos, and nothing. I see you in the next video.